Welcome to Spiedel's California Minute. I'm your host, Catherine Sedan. This week we're covering California's final budget deal, which contains numerous tax changes. Master California's tax minefields, such as residency, community property, and apportionment, plus get a conformity update at Spiedel's Critical California Tax Issues webinar on August 26th. You can see a full list of topics and get registered for this 2-hour webinar at Spiedel.com. This week, the governor and the legislature agreed to the following significant changes to California tax law. SB 122, which has been signed by the governor, will expand California's sales and use taxes to cover purchases of electronic software and other digital services, but there are numerous exemptions, such as purchases of digital assets, movie and audio streaming services, ebooks, and video games. The expansion goes into effect January 1st, 2027, so businesses should move quickly to finalize any purchases of software and software-as-a-service products in 2026 to avoid this tax increase. Under California sales and use tax law, leases are treated as a continuous sale, so any lease or licensing payments made after 2026 would be treated as a purchase subject to the tax. SB 122 will also extend the current $5 million business credit limitation through 2029 and make a revised limit permanent beginning with the 2030 tax year. The net operating loss suspension is not extended, which means all businesses will be able to claim a net operating loss deduction beginning with the 2027 tax year. And finally, SB 122 will lower the $800 annual tax for LLCs, LPs, and LLPs to $400 for the entity's first year of operation, applicable to the 2027 through 2029 tax years, and impose a 100% tax on any settlement received from a federal anti-weaponization settlement fund. Another bill, SB 180, which is awaiting the governor's signature, will generally conform to the federal tax treatment of Trump accounts beginning with the 2026 tax year. California will also conform to the exclusion of employer contributions to Trump accounts. And SB 180 will extend the California Competes tax credit through the 2034 tax year. SB 125, which was signed by the governor, will apply a uniform managed care organization tax of $8.85 per enrollee on both public or Medi-Cal and private plans for the 2027 through 2029 calendar years. Currently, California applies a much higher rate against certain Medi-Cal plans. However, California's current tax runs afoul of the requirements enacted by OBBBA, and so it had to be revised. According to the California Legislative Analyst's Office, this could result in a 1.5% increase in monthly premiums. Finally, the governor signed SB 164, which lowers the Medi-Cal eligibility non-exempt property cap from $130,000 plus $65,000 for each additional household member to $21,000, or $31,000 for households of 2 members, plus another $1,550 for each additional household member, up to 10 household members maximum. This change, which will be effective no earlier than July 1st, 2027, will impact California residents who are age 65 or older, have a physical, mental, or developmental disability, live in a nursing home, or are in a family that makes too much money to qualify under the federal rules. The asset test was reinstated in 2026. It does not impact the Medi-Cal eligibility rules for supplemental security income recipients who still have to comply with the SSI asset limit rules, which are $2,000 for an individual and $3,000 for a couple. Spiedel's California Tax Letter is a monthly newsletter that will ensure both you and your clients are up to date with California tax law changes. You can get subscription details and download a sample issue at Spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.